Welcome everybody, my name is Mike Hamilton from Trade the Easy Way, and I am looking at the Nasdaq. So what the Nasdaq does, the rest of the market tends to follow. So what I've done here is just pinpointed this range that we're in. So obviously with this lovely big push higher, but what I've identified here is this range, this box play we've got going on here. So since June, this was resistance here, broke above it, retested it, and then went on this three-wave move into these new highs, three-wave corrective pattern, and here we are sitting right at the high of the range. So if this 24,000 gets broken, that will become the new floor, as was the case here in early July. If we close underneath 23.5, at the very least we're going to get a pullback to potentially down to this 22.5. Okay, here's the sort of neckline. So if we shuffle around in here and ultimately close above 24,000, we're going higher. Close underneath this 23.5, I'm going to see 22.5, and so on and so forth. FTSE, not too dissimilar. This was resistance, this 8700 was resistance in May. We broke up, retested it in late June. We run up to 93.65. Held the 50-day average and looking like we could go and retest that. So if this ends up with a lower high, close underneath 92, and we are going to fall. If we can get back up to 93, I think we're going to finish the year around about 90. Well, certainly going to go and test 95.43, possibly even end the year around that point. So this 93.65 is pivotal for the upside, and this most recent low 91 is going to be crucial for any bearish moves. Alright, so that's the line in the sand, that's the potential next stop, 93.65, and then 95.45 is going to be the next high if we stay up. I'm going to talk about a strange divergence in these global markets in a minute, but before I do that, let's just look at the dollar. So this is head and shoulder pattern in the dollar. We broke up but fell right back. So this is the line in the sand in the dollar. If this 97 holds, we close above 9800, we are going back, which could have major repercussions for US stock market. If we close underneath 97, close underneath 95, this is going to really fall over. Okay, what I think is going to happen is we've obviously got the Fed coming up very soon. I think we're going to shuffle around this range for a while longer. I think we're going to stay in this 97, 98.5 range for a while, and then whichever way we come out of that is going to be the direction for possibly into the back end of the year and into next year. Okay, but at the moment I'm just suggesting we're going to shuffle around in that box, which is good for the markets. All the time the dollar is stable, I think that will sustain the highs of the market and see the markets go further. This is wheat. This is what I find really quite an oddity in the markets at the moment. So we've got this incredibly weak dollar that's really fallen over and range bound, and yet here we have, you know, food stable wheat really struggling. We've got a major crop report coming out on Friday. We're under the 50-day average. We've not spent that much time above the 50-day average on this. It's so weak. We've spent all this time underneath the 50-day average. We're even under there right now. So the wheat has got to get above 550. It's got to pop up here, hold this 530 and then go and find 550 and push up if we've got any hope to see a sustainable push up in the market. So I think next year is going to be a good year for the wheat. So why? Because I think this is unsustainably low. If you get a very weak price in a commodity, then farmers are less inclined to plant it, crop yields are going to drop, and the price is going to have to rise accordingly. So at the moment, crop yields have held up very well, very bearishly, and there's a decent supply of wheat out there. So unless we get a change in crop rotation and or a weather change, the wheat is not going to do anything. But my longer term projection is of course high, which is why I'm holding it and taking a bit of heat on this. But as I've said many times in the past, I'm not leveraged, so I will absorb that heat for now, but be very wary if we go on the 5. Okay, so that's, I find it quite odd that we've got such a weak dollar, such a strong stock market, and our basic food stuff such as wheat and corn is not performing. Oil, we have had a little push higher as OPEC have been tweaking their output yesterday. So if this trend line holds and we close above 65, I think we can recover to at least 70 on this range. So we pretty much came out of this little range 3 times, got hit every single time, double bottom here, pushed, holding the support, staying above 60. We are still range bound, like so many commodities apart from the precious metals. We are still very range bound. So oil's got to close above 5, hold 65, and then I think we're going to go and see 70. Typically this time of year oil does pick up. We normally fall over as we get into the dry season in the US. Obviously there's many more electric cars now. We've got ample supply. So we've got a 3 corrective wave after the dry season. As we head in towards winter, I would expect that to go and find 70 at least. But we've got to stay above 65 to achieve that. So oil stocks and energy stocks, cyclically, this is a good time of the year to consider them. Talking of which, let's look at tallow. So tallow has dipped out of this channel and popped back up, but tallow will need to stay above 11 and 12 P to get back up. All the time we're under here, we could just break this low and keep going lower. We had a significant push higher on the 5th, so if we can get back above there, then we could retrace. The 50-day average is up there at 12.5, so any push into 12.5 could see the next drop. So if it reconnects with 12.5 on the 50-day average and then closes lower, this could tumble right back. So, but stay above 12 and then we could recover to 15, who knows, maybe even more. But tallow is not healthy at the moment. What is healthy is stocks like Prudential. Very good, strong exposure to Asia. So we did a nice run up here to 850, pulled right back to this key support, 685, and here we are testing the 161 extension up there at £10.11. Talked about this a few times, this price. Close above there, and I think this can keep going. If you want an in, I would see if you can get a drop back into £9. If it has a bad hair day and pulls back into that support, then I think that is viable. So today we've got US producer inflation, and you can see how gold has done incredibly well ever since this drop in May, down there at 31.20. We've had a series of higher highs and lower and higher lows, and we broke out here on the 27th or late August, and here we are right up there at the 127. So any pullback to 3,500 is buyable. 34.25 would be a complete boomerang and retest the 50-day average. We are very extended. Last time we got extended was up here in late April, up here at 3,500, and we dropped all the way to 31.22. So if you're in it, stay put, manage your stop. If you're not in it, consider 3,500 and possibly 34.50 if we come down and find that. But in the meantime, it's very strong. You can see we are very overbought on the RSI, but the RSI can stay up here for as long as it likes. I've seen markets with RSI up here and even beyond for months. So it is extended, it is high. We have reached an extension, but it could go higher. Don't often talk about Bitcoin, but this recent pullback in Bitcoin has been bought. If we close above 112, we're going back to 125, and then we're going to go and find 138, 140. In the meantime, this is a tough spot for Bitcoin. If we fail here and close and break this 107, then we're going to do a big retracement, possibly to a low 93 or lower. Alright, so I would wait and see with this one. So tech stocks, I'm in this soft cat. We're close above the 50-day average. If we hold the 50-day average here at hold 16, then I think we can go and find 17, possibly higher. This is a lot of resistance up here. If this ends up getting range bound and we don't close above 1650, then we could easily come all the way down to 15 or lower. But I'm going to stay in soft cap for now, see where we close today, and see if we can go and find my target of 17. Sticking with IT, IQE has just failed, just broken this 8.5 was a key line in the sand. We closed badly on last Friday, and then we saw this dip on Monday. They have said they are looking at possibly selling the company. Alright, so that's the danger of these cheapies. That's why I don't fill my boots with these things. If at any time we get above 8.5p, then this could do a recovery. In the meantime, if we break that 7, I would get out, because that could get a lot lower. Could go to 0. Alright, stocks I like at the moment. This AMS, Advanced Medical Solutions, is range bound, but that 197 has got bought, so we've got resistance at 220. If at any stage we get above 220, I can see that going back to those highs. Watch out for these spikes. If you get a spike and it just sells, particularly if it hits a lot of resistance as this did, be very, very wary, because this has done a deep retracement. So since 265, that's gone all the way down to 166. But at the moment, let's have a look at the volume. Volumes are not healthy at the moment. Got to see that break that resistance and see that volume get above these levels for that to be to achieve any kind of possibility of breaking out and coming up higher. Quick sort of run through some interesting stocks. So Vodafone's had a big move up here, close underneath 85, and that's lower. Otherwise, these dips, see how the 50-day average is just pretty much a straight line, almost a straight line up here ever since we broke up from May. So any reconnection with 85 could see that leg up again towards the pound mark. So Vodafone is still doing well. US stock BMY, Bristol Myers Squibb. I really like this. This had a massive move from 37.80 up to 62. And we've done this corrective pattern where to refill the gap that's pushed above 47. So I think if all the time we stay above 47, I think this could recover around to 62 and possibly get up to that 70 mark. So I'm going to buy in at around that 47 mark on Bristol Myers and keep a stop underneath this recent low. And as we get into the autumn, let's see if that one can pick up. Alright, otherwise things like AAL, the miner, Anglo-American, yeah, so we're very close to resistance here, but any push back to 24, I think this has got the potential to come and find possibly even these January 23 highs. In fact, if I push back to the 23 highs, yeah, you can see how this 2021 was a key support area. So any retest of this breakout area around there at 22, 23, I think is buyable. I hate buying high, but I would buy a pullback to retest that 50-day average and so on. So I'm going to be patient. So I'm not jumping in much at the moment here. At the moment, especially as we got inflation. So I think this inflation number is really important potentially for the autumn, as it can influence the next Fed rate decision. Hope that helps. Stay safe, look after your account, and talk to you soon. Let me know if you've got any questions.